This is live day trading using the CCI indicator period 14. I have just bought ISO Mobile at 8010, all right, 8010. Bought ISO Mobile. Today is the 24th of February 2016, and the time in London is 18 minutes past 3 p.m. In New York, 18 minutes past 10 a.m. So, bought it there at 8010. Let me put a line there at my entry point. And I'm going to set my stop loss, 8010. That was my entry. Okay, that's it. That's my entry there. I'll color it in green. Green is beautiful. Okay, that's my entry there. And I will set my stop loss 8010. For this trade, 30 pips. 80807980. Okay, 30 pip. Now I will use for this trade 32 pip. Okay, 7978. That's it. 7978. That will be my stop loss using 32 pip for this trade. Okay, that's my stop loss there. 32 pip. Okay. Color my stop loss into red because I don't want the price to go there at all. All right. Live day trading using the CCI indicator. That's it. I'm in this trade at 8010. Stop loss 7978. Okay. That's 32 pips. All right. And that's it. So now you'll be wondering, why am I buying okay, ISO Mobile stock? The epic is XOM S-Ray Oscar Mike. All right. So the market is open. What we say today, traders. Okay, let's start first. The market will open at 9:30 a.m. Eastern Time. We will wait for the first 30-minute candlestick bar to be formed first. All right. So the 30-minute time frame. This is the first candlestick bar. You can see that price did open here, went down, and then closed up here. It went all the way up here before closing bullishly. This is the second 30-minute candlestick bar. So what a professional waiting for is the first candlestick bar on the 30-minute chart. Now, another strategy that they use, they may use the range of that 30-minute candlestick bar. They will do something like this, highlight the low and the high of that first candlestick bar. So they will be prepared to buy above the high of the first 30 minutes candlestick bar and sell below the low of the first 30-minute candlestick bar, because if the price is going to go up, it will display higher lows, higher high. If it's going to go down, it will display lower lows and lower high. Now, but remember, whenever we are day trading, what did I say? We must find a valid trading setup. A valid trading setup. Without a valid trading setup, there is no winning trade. Ladies and gentlemen, let me pause this video because I'm going to do something here and I'll come back to you in a minute. Okay. Let's continue, traders. So we are looking for a valid trading setup. So let's go now to the daily chart and see what is happening on the daily chart. All right, this is the daily chart of ISO Mobile, and we can see, without violating the market patterns, okay, if I draw my lines like this, joining this point and this point here on my daily chart, we have a declining channel. I will choose one point here to draw a line that is parallel to the first line. So we have this channel here, okay? It's quite a big channel here, a declining channel. And the price is out of the declining channel, indicating to us that okay, the bearish momentum that was in place is diminishing. All right, it's diminishing. Okay, So I don't want to sell because we are out of a bearish channel, okay? So otherwise it will be a contra trend. In that case, I must be very, very cautious, okay? But it is not a contra trend. But not only that, look carefully here. The price was displaying a lower lows, lower high, lower lows. So this was a lower low, and we have this low here. This is the final low. Okay, it makes sense? Now, look carefully here. Then the price start displaying higher lows. The first higher low, and the second higher low. All right? But you can see that we have this blue trailer here, this one here. But what the price is doing, the price breaks above, okay? Okay, the red line, which is my my stop loss, it breaks above the red line and was retesting, okay, that red line. You see here? So breakable retest is a bullish language. And the CCI on my daily chart is also dipping a little bit below the zero line. So price out of a bearish channel and also breaking above a key level, 7978. Now retesting the key level and changing direction. This is my trading setup. All right. If we go now to the hourly chart, from the daily chart, we go to the hourly chart. We want to examine, okay, what is happening on the hourly chart. Pay attention, this is a live day trading using the commodity channel index indicator. You can see that on the hourly charts, for us technical trader, oversold means support level. Overbought means resistance level. So the CCI period 14 on my hourly chart is also oversold. It has almost minus 200, touches minus 200 zone. It's oversold, while the price breaks above a key level and was retesting the key level. Remember, on the daily chart, the price out of a declining channel start displaying higher lows, higher high, and pull back to retest a key level. We switch down frame to the 50-minute to the hourly chart. We see that, okay, the CCI period 14 is also oversold, indicating to us this is a support zone. We draw the support level, which is 7978, which is also my stop loss now because I entered the trade at 8010. The financial instrument that we are trading is ExxonMobil. Is a market leader, is one of the market leaders for the Dow Jones Index. All right? Okay, so you see my setup now. Why am I buying? The price running fast now. Can you see it? It's running very, very fast. Let's go now to the 10-minute time frame. Because why the price running fast? The smart money, okay, is also buying. So here we are, you see now. So we are now at the top of our, you see the line that I draw here. This is the top of the first candlestick bar on the 30-minute charts. So we are now there. I entered the trade at 8010. I can take my profit now. Because we reached the first target, I can take my profit now. You see how traders are taking profit here now? All right? But for the demonstration of this technique, I will not close my trade here because normally I should close this, I should take my profit here. I enter A010, the price went quickly up to retest the high of the first, okay, it's there again now at A042. Here, this is where we are now. So the first candlestick bar, this is the range for the first candlestick bar on the 30-minute. In fact, okay, I wait a bit, all right, before I close that trade. Okay, CCI is oversold on the 30-minute chart. Okay, on the hourly chart. A trading signal is in place. It's not taking place anywhere, anyhow. It's at a key level, as we have seen on the hourly chart. Here it is, oversold. Look, my CCI form a double bottom chart pattern here also, and it's touching here, okay? All right? But today is Wednesday, all right, because I want you to understand a few things. Today is Wednesday, and which economy news can change the dynamics of the market on Wednesdays? Today is Wednesday, yes or no, okay? Let me show you. Whenever you are trading on Wednesday, check it out. Crude oil inventory. Beginning of the week, check when the crude oil inventory is due. This will affect day trading and swing trading. The forecast of the crude oil inventory is 2 millions, but the previous figure was higher. So if the forecast is lower than the previous figure, theoretically it means that crude oil will be bullish. But this is about the theory. The reality of the market can be different. But we are waiting for the actual figure, which we'll do very shortly. Let me refresh my screen. Should be coming out soon. At Forex Factory, going back to Wednesday, crude oil inventory. Here it at 10:30, it's out already. It's quite high. So you see, the previous figure was 2.1, the forecast 2 millions. The actual figure was high. Now, this is bearish for the actual figure, is bearish for crude oil. So if it's bearish for crude oil, it may affect ExxonMobil, which is also a company dealing with crude oil. Let's go back to the chart again. But I will not change my trade just because of the economy news. But I'm aware of this economy news that is now bearish. They may take me out, but I'm using 32 pips. If they take me out, well, should I call my mother? No, I will not call. But I stick to my strategy, and I continue with my trade, okay? Everything is okay with me so far. If they dip below the low of the first 30 minutes candle, then, okay, I may consider to sell also. But remember, without a valid trading setup, there is no winning trade. On the daily chart, the price out of a declining channel, and start forming higher lows and higher highs on the daily chart. Therefore, if I'm selling now, it's a contra trend, and I don't want to violate the market pattern. Though the economy news is bearish, I'm aware of it. I'm not ignoring it. I know that, okay, they may take me out, it may cost me 32 pips, but I'm aware of it, and I want to, okay, trade, okay? It's my decision. So to avoid that the video is too long, okay, I'm already in this trade, as you can see. My entry point at 8010, and my stop loss 7978, using 32 pips. The economy news is now released. It's bearish. I need to know, okay? You need to know, all right? I may decide, because it's bearish now, I have a few choices. I can decide to come out now, straight away, okay? I may decide to stick around, which is my own decision. In that case, I must control the risk, all right? This is it. But I've decided, now I'm deciding to remain in this trade. The CCI on a hourly chart is oversold, all right? But it's not oversold anywhere, anyhow. It's oversold after a breakout. Let me show you something else, which I'll talk about today in another video to traders. If you look carefully, my friend, look carefully on the daily chart. Will you agree with me that there was a consolidation between the green line and the orange line? Here you see, price went to the top. Here it is. It popped up a bit, but here 90% of the price action for almost 5 days is between the green line and the orange line. This is a breakout. So the move from here is a breakout and a pullback to retest the top of that consolidation, which is the green line. So price out of a bearish channel. There was a small consolidation here because people were trying to sell again, because remember, a bearish channel means that, okay, the market is saturated by the bear. As the price come out of the channel, the bear want to push the price back inside the channel. That's why we see a consolidation here. The consolidation was taking place because the bull are buying and the bear are also selling. The bear are selling on top here near the green line, and the bull are buying near the orange line. Now, by the way, the orange line that you see on this chart here is what we call the short-term equilibrium price level. Now, don't even ask me how I calculate it, because I will never tell you. Okay? All right, I will not tell you. It's my own proprietary trading tool. It's not part of a TSTW trading tool or any trading system that we sell. It has nothing to do with our trading system. It's my own proprietary trading tool, okay? So for the next 2 weeks or so, day traders and swing traders must watch the level of 7882 if they are trading ISO mobile. Priority to bullish signal above and priority to bearish signal below using a top-down trading method. So another reason also why I don't want to sell is because the breakout has taken place above, okay, the short-term equilibrium price level for ISO mobile. That short-term equilibrium price level is 7882. That level will remain in place for the next 2 weeks or so. All right, it makes sense? So you see now, the setup, the signal, and the low-risk entry point. I was analyzing the stock on the daily chart, on the hourly chart, and also on the 10-minute time frame. On the 10-minute time frame, what do we see, my friend? Look, it's oscillating here, oscillating. It went up and then pulled back again. Here we are at the center of this consolidation on the 10-minute time frame. So on the 10-minute time frame, you may say there is a consolidation between the orange line and the blue line, yes or no? And the median line is somewhere near the red line and the gray line. Will you agree? Check carefully, okay? Went up, pulled back, went up near the blue line, pulled back near the orange, went up, pulled back. Then, look, okay? Prime went back inside the consolidation zone, but stopped near the median line, okay? Now, I need to take my profit now, because the price now at 8060, that's a 50 pip, 50 pip, very fast. Hold on a second. I need to grab my profit before it's too late, okay? I'm grabbing my profit now. That's it. I'm out of this trade. 50 pip, 50, okay? So you see now, 8061. If I zoom into these charts, bear with me 1 second. Waiting for the chart, you can see, yeah. So here we are. Where is my green line? I want to see my green line. I'm out of this trade already with 50 pip, okay, profits. That's beautiful, isn't it? So you went up all the way to 8066, okay, very fast. On a 1 minute time frame, I can't see my green line. What is it? Okay, let's go to the 3 minute time frame. Hopefully we'll see there my green line. Where are you? Let me push my here it is. Can you see it? It's there now. Here it is. Oops, it's gone. Yep. If I zoom into it, you can see it. I need to, okay, here it is. That's my green line. A010, that's my entry. Stop loss, 7978. Push it up, 50 pips, very fast. Now, I need to re-enter this trade again. So I will be monitoring. So as a day trader, we must grab our profit gradually. 50 pips for a day trader is a lot. Grab it and wait for another chance to re-enter the trade. Sometimes the price may run too fast. I may leave some money on the table. Well, it happens, so what? Okay, it doesn't matter, okay? You see now? Okay? So this is how one can day trade using, okay, the CCI indicator. The setup, the signal, and the low risk entry point. All right? It makes sense? It is also powerful, all right? So let's go back again because I'm already out of this trade. I don't want this video also to be too long. I've been talking to you now for 18 minutes, okay? So let's wrap it up, okay? So I may re-enter this trade again because now you can see the range of our first 30-minute candle. It's now the price now above it. So professional will be willing to buy above the high of the first 30-minute candle. But remember, it's not because the price is above the high of the first 30-minute candle. The source or the origin of a trend is always from a valid trading setup, okay? Around a key level. The key level here is 7978. That's my stop loss. Because the price breaks above that key level and retested it, and now it's changing. It gapped down to retest that level. Now it's going back up, okay? So professional, you see the time I entered the trade, it was past 10. Okay, it must be a past 10. Market open, first 30-minute candle is closed, then we come in the market and then we enter the trade. We don't want to ignore the economy news. The economy is out. It's bearish for crude oil, but because the market sentiment has changed for a while, for day trading purposes, this is not for swing trading because we are concentrating on the short-term trend, all right, using the CCI indicator. You will notice something also, that on the daily chart, the CCI was dipping a little bit below the zero line. Okay, let's examine that a little bit, my friend. Okay, now CCI dipping below the zero line, it means that the price is below, because we are using CCI period 14, the price is below the moving average 14. But look at the direction of the moving average 14. The moving average 14 is still bullish. You can see it's quite rising, yes or no? But the price dipped below it a little bit. If it's changing direction, okay, we need to watch it. So that's why I took my profit now, because the price was trying to retest the edge of the moving average 14. Some traders will place order to sell there. So it break below the moving average 14, trying to retest the moving average 14. Some traders will try to sell on the edge of the moving average 14 to bring the price back down. That's why I quickly took my profit somewhere near that level. So on a daily chart, you can see CCI was dipping below the zero line. The zero line is also a support level corresponding to the moving average. Okay, CCI 14, moving average 14 in this case. All right, dip below it. Now the price trying to retest it here. But we are not trading the CCI as such. Okay. So look what the CCI is doing. So we were in a bearish triangle, the bearish channel. All right, CCI, we will concentrate on overbought CCI during that time when the price is in a declining channel, because we are trading the price, not the CCI. The CCI will give us the warning, but the price must confirm it. Now look, the price out of the declining channel, okay, confirming to us, okay, telling us that the bearish momentum is diminishing, not ending as such. We can't say that it has ended, but it's just diminishing because the price starts displaying higher lows above the declining channel. But look, what has happened here, the bullish momentum, because the CCI, you see, went all the way up here, is indicating to us that the momentum is strong. So if the bullish momentum is strong, and we receive a bullish signal on the edge, we'll take it. So this move here, all the way up here, is just the speed telling us that the momentum is becoming very strong. Be ready to buy. So now, where should we buy? We should buy around key level like the professional. But as we are buying, we must also manage the trade. That's why I come out now. So if I want to re-enter, I get 50 pip out of that trade very fast. You can see that it's not even we did 45 minutes, less than 40 minutes, 50 pip. Great trade. Why is a great trade? Because the setup is beautiful, is good. Concentrate on the setup and then take it steadily, okay, like a pro, okay? Here we are, okay, step by step. So you can see here, on the 10-minute chart, the price was coming near the moving at 14 on the edge. As I explained to you, see here, again, on the, some traders are selling. You see here, on the, you see, they will sell because you see the direction of the moving average, 14 on the 10. Some traders are selling on the edge. So it goes down, it comes near the edge, I will come out. Come out. You want to buy, let it go above the moving average 14 again and to find a support. So then the moving average 14 will be changing direction. Here you see when it's going up, traders are buying on the edge. This is quite tricky for new traders to trade like this. This is what I'm talking about last time. Okay, when the market is too fast, we need to go to a lower time frame, and for new trader it can be tricky. So you need to come out like this fast. Okay, I may re-enter this trade again in another place. Okay, if it pull back again near my entry, and then I see another bullish chart pattern, I may decide to take it again. But right now, come out, come out. Okay, otherwise it may become a losing trade again. Okay, this is the end of this tutorial about live day trading using the CCI indicator like a pro. If you have any question, put in the comment section, and in due course, we will record another video to answer your specific question. If you want to learn more to master the CCI day trading, go to www.dayprotrader.com or subscribe to Day Pro Traders YouTube channel. Until the next time, enjoy yourself and be very happy. We are the GSTW 24 traders talking about live day trading using the CCI indicator like a pro. Speak to you soon.